Mortgage rates have been on a roller coaster ride this year, but now they're close to 7.5%. And if you're thinking about buying a home or refinancing your loan, this is good news for buyers. If not, it might be time to wait before making an offer. Mortgage rates have risen sharply since last November. If you're thinking about buying a home but haven't yet put an offer in, you might want to hurry. The average rate on a 30-year fixed mortgage is 7.3% already as of this recording, and housing market outlooks are now further dampened for at least the foreseeable future due to persistent inflation and the possibility of additional Federal Reserve interest rate increases. According to Freddie Mac, the average 30-year fixed rate mortgage increased to 6.94% in the week ending October 20th. The most popular mortgage product rose 2 basis points from the previous week, reaching its highest level since April of 2002. Just imagine, 1 basis point is equal to 1/100th of a percentage point, and believe it or not, last year at this time, the rate was almost 4 percentage points lower at 3.09%. This week, the average rate on a 15-year fixed mortgage increased to 6.23%, from 6.09% last week and 2.33% a year ago. The average 5.1 ARM is down 5.71% from 5.81% the week before and 2.54% a year ago. Since ARMs currently have a lower rate than a fixed rate mortgage, they have grown in popularity as borrowing costs have skyrocketed. For the week ending October 14th, ARM applications made up to 12.8% of all mortgage applications, according to the most recent Mortgage Bankers Association, when compared to just 3% of all mortgage applications in January of 22. That represents a jump of almost 10%, and the thing is that those rates don't include fees or other expense related to getting a mortgage. What is the future of the housing market? The housing market is predicted to remain stagnant for the foreseeable future by a number of indicators. The most recent is the Zillow report indicating that although national home values increased by almost 13% over the previous year, they remained largely flat between August and September. There has been 30% decrease in year-over-year home sales as a result of prospective buyers staying put due to sticker shock and high mortgage rates. So many experts anticipate that this trend will continue in the upcoming months. Mortgage rates approaching 7.5% have significantly weakened demand, especially amongst first-generation home buyers. So which is the best time to buy a house, you ask? The best time to buy a house is when homes are selling quickly and low prices. And this is especially true for houses in hot markets like San Fran, New York City. But if you wait until late in the game, you'll likely pay more than you should because there's less competition on each open house listing, and thus fewer offers made on them by buyers who want to beat their competitors' offers out the gate, because anyone who does so can negotiate with sellers directly, and they don't have to go through an agent first or wait weeks or months. We won't know the true impact of the mortgage rate increase until we get more data, but it seems safe to say that the number of people who buy homes will be affected by rising rates. If you've been putting off buying a home because of these high costs, this might be one last reason to start shopping. Alright guys, thanks so much for watching my video. Give me a thumbs up, a comment, and I'll see you in the next video.